$4 trillion. That's not just a number. That's a seismic shift in financial history. Nvidia, once a small graphics chip designer for gamers, is now the first chip maker to cross the $4 trillion market cap. But how did it happen? Is this a bubble waiting to burst, or are we looking at the future of technology itself? Welcome to the story of Nvidia, the AI boom, and the trillion-dollar race that's reshaping everything. Nvidia's origins. To understand Nvidia's $4 trillion triumph, we need to go back to where it all began. 1993, Silicon Valley. Three engineers, Jensen Huang, Chris Malachowski, and Curtis Priem, saw the future in graphics processing units, GPUs. While CPUs ran general-purpose computing, GPUs were built to crunch huge amounts of parallel data, perfect for gaming, simulations, and eventually, AI. In 1999, Nvidia launched the GeForce 256, the world's first GPU. It was a game-changer. Gaming boomed. Nvidia grew. By the mid-2000s, it dominated the graphics card market. But behind the scenes, a storm was brewing. The AI revolution. While Nvidia was fueling gaming, another industry was quietly eyeing its technology. Artificial intelligence. Neural networks, once dormant, found new life thanks to Nvidia's CUDA platform and GPUs. Suddenly, researchers could train massive models faster than ever. In 2012, a deep learning model called AlexNet, powered by Nvidia GPUs, won the ImageNet competition by a landslide. This moment ignited the AI revolution. Google, Facebook, Microsoft, Amazon, they all jumped in. Nvidia GPUs became the fuel for AI research. Data center domination. Gaming was once Nvidia's main source of revenue, not anymore. Today, its data center business powers the world's largest language models, AI infrastructure, and supercomputers. Nvidia's A100 and H100 chips became industry standards. In the age of ChatGPT, Claude, Gemini, and Midjourney, every AI company needs thousands of Nvidia GPUs. Supply can't keep up with demand. This is scarcity economics at its peak. Jensen Huang calls it the iPhone moment for AI, and Nvidia is Apple, Samsung, and Qualcomm all rolled into one. The $4 trillion moment, on June 18, 2025, Nvidia's market cap crossed $4 trillion. To put that in perspective, that's more than Amazon, more than Tesla and Meta combined. It wasn't just hype. Revenue exploded from $27 billion in 2023 to over $120 billion in 2025. Margins climbed. AI partnerships poured in. Governments and militaries adopted Nvidia tech for defense, research, and infrastructure. Investors saw it not just as a chip company, but the foundation of a new technological era. Risks and warnings. But every boom has its risk. Some analysts warn that Nvidia's valuation is unsustainable. The PE ratio hovers above 60. Insiders have begun selling shares. AI regulation is looming. Competitors like AMD, Intel, and startups are racing to catch up. And geopolitical tensions could impact Nvidia's global supply chain. Is Nvidia overvalued? Or are we still underestimating the AI revolution? The future of AI and Nvidia, whether it's robotics, autonomous vehicles, AI co-pilots, or medical imaging, Nvidia is positioning itself at the center. It isn't just selling chips, it's building platforms. Omniverse for simulations, DGX Cloud for enterprises, and Grace Hopper superchips for hybrid workloads. The world's infrastructure is being rebuilt on AI, and Nvidia wants to supply the bricks. Conclusion: $4 trillion isn't the end, it's a signal. A signal that the AI era isn't coming. It's here. Nvidia's rise reflects the ambitions, fears, and opportunities of this new age. But every golden age has its reckoning. Will Nvidia remain the crown jewel of AI? Or will history rhyme with a crash? Only time will tell. Subscribe for deep dives into tech history and investing.